Alan, Trade the Well North, State, Austin. How you guys doing? State of Focus. How's everyone doing? It's time for my favorite part of the week, too. Mondays. That only became true about 3 years ago. I used to never want to get out of bed for school as a kid. 15, 20 years ago, you'd have to come and wake me up 6 times. I just opened a Peach Vibe Celsius. Big supporter. That's why I'm staring at their stock so hard. I realize I've been helping these earnings go up quite a bit. It's actually a pretty dang nice chart. We'll see what happens. This market is still very weak. Yuli, good morning. Little gap down in a bunch of names. So I guess we'll see where they stand from Friday, because Friday was the options expiry, and I guess we'll figure out how much of that closing on Friday was real or how much of it was just those options expiring. Because a lot of names traded really heavy volume to the end of the day. So when you look at something like, LTHM, this elevated volume, it's mostly because of this one candlestick at the end of the day. Well, it's basically all. So, I don't know. EMPH broke out on the hourly. Yeah. I mean, it also broke out on the daily. We're in it from much lower. But yeah, the CMPH is starting to look good for maybe some more follow through. It really just depends the state of the market. Like I've said before, there are days when things just go up. Everything in the market just goes up, and it's because of the market. If you want to buy a breakout, you better wait until the market's going up. It just makes your life a lot easier. Yeah, state of focus. There you go. I'll answer this. If I don't answer it right away, just please remind me. The question is, how do fundamentals play in a breakout swing trading? Yeah, I'll go into that for sure. They actually play a big role. Because you have to remember, the reason that a chart looks the way it does is because of institutions, right? Because of pension funds, hedge funds, players with really big money. And we'll talk about, what kind of fundamentals are things that institutions would be looking for. And then playing that in a healthy market. So, yeah, we'll talk about those fundamentals here in a minute. Great question. And how we combine the two to put ourselves in the best possible names. Man, this crude is looks terrible. Yeah, they are. When these companies have these EP gap ups, like TH took off, before earnings, but that's because somebody obviously knew something. And you could see this massive gap up, and then of course their earnings ended up being much better, than the previous quarters. And even though it had this ugly day on earnings, it held right up. TH is one of those that's on my radar. But yeah, you want to pay attention to that. Somebody really wanted in. And the fundamentals are why this, TH doesn't just go from, 7 to 15 without some strong fundamentals. Their sales and earnings growth are amazing. Yeah, sales and earnings growth are the catalyst. Should be an interesting day down here for Oxy. It's resting once again right on the 100. Right down here. Right down here. We'll see if this thing does what it's normally been doing. Just bounce right from this area. And this Tesla looks good too, man. This Tesla looks really good. Doesn't look anything like the other mega cap tech stocks. Apple. Yeah, Tesla does not look like the rest. Yeah, it'll be nice to figure out how to get situated in this dang thing, because it's if there's a name you'd like to own, right, that can make a really big move, that can lead the market, Tesla kind of fits the bill. Could make a 25-30% move fairly quickly. Well, we'll see. This looks really good. It'll definitely be on my my main screen and on watch the entire time. Yeah, so for me, the range, it's just the area in which majority of price action, takes place. Like these very top little wicks, as important as they are, the further we get to this area, and again, a lot of times I want to buy something over the previous day's high. So like if I was really interested in Tesla, it's got to take out a 307.73 or 72. It's got to take out this line. But the further price action gets away from those wicks, like the further to the right of the chart, the really less I think about them. As long as the trend line is pretty well defined, or the area is pretty well defined. If this thing's a nice violent breakout in a healthy market and it's going to end up being a leading name, like $1 and a $300 name or a $2 $300 name, it's not going to have much effect. Nice to see too. I don't really think about volume too much like this, but it's nice to see even the Tesla volume, decrease, on this pullback here. Volume decreasing on this pullback. It's always nice to see. It's the only real time I think about volume. And volume ramping up through a level. But, and again, referring back to those wicks when I do buy something, if the previous day's high had a little wick, then I would be drawing it over the top of that wick. It just depends. If I'm buying a breakout, I want it to be over the previous day's high. Yeah. Yeah, for me, CCJ is still fine. It's tough. It's acting like an asshole, but yeah, I'm still in CCJ. Not having a lot of fun, that's for sure. Good morning. Doing well, doing well. That's fine. You've got to stop on all your thing. Good. There's not a lot to do here. Good. Yeah. Alrighty. I'll talk to you here as soon as you're back. Safe driving. Bye. Why do I use exponential EMAs? Some people use SMAs, some people use EMAs. I've always just found them a little easier to look at. So it's really more of a visual thing. Yeah, I've always found them easier to look at. They just seem to be a little cleaner. I can stare at SMAs if I chose. Like, I can change them up on my chart pretty quickly. Right up here it says SMA. I can change them all. But yeah, it's more of a visual thing. I think it's also the concept too. They're usually around the same price. Not always, especially not the 200. Sometimes on the SMAs it looks much different, but like the 10 and the 20 for the most part are fairly similar, and those are the ones that I focus on the most. Um, and EMAs are just cleaner, but it's just about the concept. And sometimes I will let things close just below the 20 as long as it's putting in a higher low on the daily. Like my real stop for CCJ is under this 26.5 area. It's below this pivot area, this little low down here. Yes, sir. Yeah, Wolf. This thing looks damn good. I just would like to see price flatten out a little bit, but again, I'm not too sure. How much of this move had to do with the options expiring on Friday. Not sure. A lot of abnormal volume hit a lot of stocks towards the end of the day. So I'll just give these things some time to shape up. Besides, guys, if you look up the last letter and cancel them, M is market, and right now we're missing the one of those components to successful swing trading. It's important to identify, names that you believe can be leaders, or names that you like, that are setting up. Wolf, CELH, EMPH, FSLR, Charge Point, TH. The list goes on and on. It's important to have identified, some names that you like. STEM's another one. Obviously we just looked at Tesla. The question is, how are these lithium names going to go? LTHM, something like GFS, this thing's maybe down the road, another semiconductor on, things like that. Another semiconductor, AEHR, so there are things in certain spaces that, that there's spotty strength throughout the market. And obviously this isn't because me and you and our best friends are holding these things up. It's people with much deeper pockets. So it's important to realize that. And they're bucking the market trend right now. So, if you have a few of these names identified, it's just a matter of looking for healthy setups, something relatively tight, coming out of a clean base, and then doing it in a healthy market. And again, state of focus. One of the things that I wanted to mention is, the reason this thing's even holding up as well as it is strictly fundamentals. There's something going on in the company sauce right now, quarter over quarter. Good to remember. I will, well, that's stupid. Do. It's something for everybody to, take a look at. Where's it at? Where did it just go? Okay. It's good for people to read this if you haven't. So stocks usually have a average increase in earnings estimates of 48% before their big move. So remember, most of the times what stocks look the way they look is because of the institutions that are holding it up for you. But what did they have in the sauce? What is it? Earnings increase, earnings estimates, increase in sales, increase in guidance, right? That's the fuel for your moves. I don't really have. I've got a group of names that I'm watching. Something like Wolf, ENPH, TH. This one's a little thin for me, but TH. Something like AEHR, just seeing how it kind of finishes taking shape. It's not ready yet, but I will be watching it. CELH, seeing how that takes shape. There's not a lot to do in this market, guys. Just because you identify a bunch of setups, yeah. EMPH, nice flag 1 hour, yeah. Yeah, I'm already in there from earlier, but yeah. If this thing goes sideways 2 more days and then starts to take out 320, there you go. No, no, because things do break out. Just because they're in the right group, right? As long as they have a nice setup, you can buy something like SPWR, and I'm sure their earnings are going up. I'm sure they're looking a little bit better, but it doesn't necessarily have to be that perfect accelerated growth, etc. You could still catch a really nice percent move just because of its industry group. So it doesn't, have to be the end all be all. But it is the reason that something gives you a fairly stress free move. Is there some way if a stock tells me, yeah, I mean, that's about as much of a signal as you're going to get from a stock, right? Is it under what I look for is obviously it's got to be above key moving averages. It's like the first thing I key in on. And then once it is it in the right group? When I'm scanning, that's one of the first things I'm looking for. Like, okay, is this a nice setup? Check. Is this in the right group? Check. And then if I look at the fundamentals, do they have some form of earnings growth, sales, you know, etc.? Check. And then, how's the overall market looking? If the overall market looks like ass, yeah, is your stock can be bucking the trend, and that's completely fine. But I'd really prefer to be doing something in a healthy market. It just makes it easier because, like I said, there's going to be days in which you buy something and everything just flies higher. Literally, everything just goes higher because it's in a healthy market. But, like, when you end up looking back 5, 6, 7, 10 days, what ends up giving the biggest move? Even if the market ended up pulling back again, it's going to be the stocks in the leading groups coming out of like nice, clean, sound bases with good, fundamentals, to back the move. So that's always something to remember. Always something to remember. Fundamentals, I like to look at Market Smith. It just tells you what group they're in, and obviously it ranks the groups. It tells you, their composite rating, accumulation distribution. It tells you their shows you their relative strength line. So it basically lets you know how if they're outperforming, other stocks in that group, or compared to the rest of the market. If they've got a nice little 97 relative strength rating, well, then they're outperforming 97% of the stocks in the market. And stocks that outperform can continue to outperform. Yeah, yeah, like 28%. I mean, I'm probably closer to 40 because I'm way more selective, and I oftentimes when I get like a nice 2 day push, and I can time those out pretty well because I do a whole lot of nothing when the market's like this, but when the market's at my back, it's not hard to find these little 2 day pushes, and then oftentimes I bring my stops up to break even. So, you know, I'm flat a lot, a lot. Yeah, it's a bit expensive, Market Smith, but it's honestly well worth it. I know it is a little expensive, but good luck, guys. Market's open. see where these solar names bounce. Or if they bounce, who knows? Maybe an undercut rally today, who knows? We'll see. I personally wouldn't mind seeing Tesla come back down to this 50, about low 280s. And Oxy, maybe, just maybe, spoke about this in pre-market here. It could very well be finding support at this rising 100. Who knows? Yeah, it's done it before. It's done it before. You know, I guess there's your question mark. There's your question mark. Does it find support again? Who knows? It's not like I want to buy this weakness. I'm going to wait for it to get back up and go sideways. And really, just right off a first glance, you know, that area would be nice. You know? What happened? Yeah, ARRY. I've got no alerts hit so far. Guess that just goes to show you what kind of quiet market we're in. Sometimes that's a good thing and a bad thing. Things just needed more time anyway. Wouldn't love to see things breaking out just yet. EMPH looks beautiful though. Stem, not bad. Wolf. Yeah, this thing's nice too. I can't really do anything with Wolf. It hasn't really shown me a tight day. I need tight. Some form of tight. It's nice that it's crossing up over these two tops, 121, but I just can't do anything with it. Nice chart though. Really nice. FSLR, CELH. Yeah, CELH looks really nice. On looks pretty nice too. A few more days on this right hand side. But it's nice to see things are kind of, you know, perking up almost from, you know, almost like this Oxy perked up right kind of from where I was expecting. Right from this 100. It's done a really nice job finding support there several times. See what it does in a few days. Kind of light volume today. I do buy when it's not tight, but it's a rare exception. You know, these financial names like Schwab, Raymond James, what's the RJF? You know, RJF actually is really nice. You know, it's slow, but really nice move up, and now just starting to flag out, you know, finding support on the rising 50. God, if these weren't so slow, like Raymond James Financial, Schwab just hit my alert, SCHW. This one's a little bit faster. I think IBKR was another one, Interactive Brokers. I mean, these things are strong. And so you got to start to recognize what sector that's in. You know, and maybe solars and these financials, banking can take us higher. I have no clue, but maybe. Oxy, nice perk up. Really nice on the daily. It's kind of light volume, but still very nice. Tesla looks so nice. And again, it's, market looks like crap. Look at how well this thing's holding up versus Apple, versus Microsoft, versus Google. You know, some are just not the same. Tesla is by far the best acting, not even close. How do I define a tight candle? Well, the average daily range. That's how I define tight. You know, or go look back on 1022 for Lucid. That's tight. It's one of my favorite tight daily candles I think I've ever seen. Okay, Uncle Warren, we see you. Wow. I guess I need to start maybe consider adding some of these into my playbook. I mean, even before pre-market, what did we say? You know, see if Oxy finds support down here in the rising 100. I don't really like to do these dip buy setups, but damn, you'd be up almost $2 a share. Really, finding support on major moving averages, you just have to use like a smaller time frame. Define what your opening range high would be first. I don't know that I had a perfect area. Both. I want volatility contraction, but out of tight volatility comes explosive moves. Yeah, the reason you want tight candles is for volatility contraction pattern reasons, not to manage risk. Yeah, tight is what helps you manage risk. Yeah, I gotta learn. I gotta study how the hell I would get into something like this on Oxy. In the future, I'd like to be able to buy this thing right off the 100, but, how do I do so, like, what's your opening range high? Is it first 5 minute candle to make a high, first 3 minute candle to make a high? I don't know. I don't know. When I'm going to have to go back and try to figure out for later. Because, I'd like to catch these, I mean, even though it's like not a perfect entry, and if you're looking to buy it near 67, I mean, owning it $5 sooner would be nice. Figuring out how to keep your wrist tight down here somehow. One to go back and study for sure. And if Tesla goes higher, it's going to just give a boost to our markets. That's what's really going to end up happening. Weird. Oxy's acting way better than DVN this morning. Well, looks like Uncle Warren's not on DVN. He must be just on Oxy today. Yeah, the thing with Wolf is it could just be breaking the range, right? I mean, outside of the range is really good too. Problem is I just want a tight candle. I mean, you can say 915 was tight, but I need something a bit tighter. Oh yeah, on and this Tesla look super good. Okay, we'll see. I think lithium names just need a little longer. ALB, SQM, LTHM, LAC. I think lithium sector looks pretty damn strong, but they just need a few more weeks or a week even. I'm kind of just basing it off how SQM looks. You know, it'd be nice to see SQM take out these 115s, but just needs to tighten up under that level. If I had to guess, you know, maybe a perk up around this 113, 114 level and then just tighten up some more. Yeah, don't think about so much of how expensive something is. Think about it in terms of average daily range. You know, because $100 stock can move 20% just as much as a $10 stock can move to $12. So you know, position sizing and average daily range are way more important. You know, having proper size regardless of the price of the stock is a much more important concept. And how did I grow a small account? I grew a small account in 2020 when the market was incredibly hot, and I used to be a day trader. And I used to be an asshole. I used to oversize really big, and I, in essence, got fortunate growing a small account quickly. You know, something that worked really, really well in 2020, maybe even early 2021, was something that we called sympathy plays. You know, when GME was going crazy, you used to be able to basically take infinity amount of size on costs or AMC, and you know, and catch quick scalps. Just you know, as the stocks were essentially mirroring each other. Um, and then same thing like with you know LEDS and MOSI and WISA and DLPN and TCAT. You know, there are stocks that just move together. Yep. And it was about the easiest thing you could have ever taken advantage of. I mean, I remember the day I literally made 250,000 just sympathy trading, and you were just watching one stock, and as one stock was going crazy, you would just buy the other, and then as soon as you'd get that nice little, even multi-minute pop, you know, you'd be out because things were incredibly liquid and had tons of range. So, peach can's not empty. You know, Tesla doesn't necessarily feel perfect just yet, but I did take a starter And we'll see if today's day's low hold. You know, again, I like at least that the market's pressing up. Tesla looks perfect. And, I know it should get a lot of attention, but just half size of what I normally would take in a situation like this. Yeah, Wolf looks to be breaking out. Again, I just kind of passed. It's just not perfect. And that's okay. I'm all right letting something set up or just missing it altogether. There's a lot of names that I would like to own. CELH, TH. We'll see how these other solar names end up panning out. CSIQ, ARRY. ARRY seems to be coming right back. If Oxy holds support on this 100, I'll be interested in this name again. So there's quite a few things that, have my attention. I don't have to own, every single one. This on also has my attention. And GFS, AEHR. There are names. Suave. LNTH. This one should be interesting. We'll see if it holds. LTHM. Yeah, lithium's acting right. Lithium's acting perfect. I didn't love Wolf for two reasons. One, I didn't think it was super tight on the daily, and two, I don't believe we're in an incredibly healthy market. So, one of the two has to definitely be true. Now, Wolf's a nice strong setup, but the market kind of sucks. If this market was a lot better and this wasn't a perfectly tight setup, okay, I'd feel way better about it. But if the setup were tighter and the market's still kind of crummy and I could keep my risk lower, though, then I would be good with that too. But, the market's kind of crummy and it's not perfectly tight. So it's just, I don't have to take it. I still have plenty of exposure open. And it's not like a bunch of them's flying. It's not like my positions are absolutely flying for me to just want to get excited about continuing to open up risk. Guys, your thoughts have to be risk first. I don't really think about how do I deal with failed trades or bad days. I just keep scanning. I keep my losses pretty small because I size properly and I don't buy too much on crappy weekdays or and I don't just take like one loss and then another one and then another one and then another one. I start sizing down. I want to get aggressive behind a healthy market and behind seeing things well. Getting aggressive behind getting progress in the portfolio. Man, this LTHM could be right in a few days too. Maybe later in the week. How's Aura looking? Yeah, this Aura, man, this thing looks damn good too. Aura looks good. We'll see. Another one of these really nice high type flags. Yeah, that weekly looks awesome. Aura. Nice. Yeah, things are things are bouncing today on almost, especially in that energy space. We'll see. XOM may be finding support on the 100. Yeah, Oak Street Health. I think I mentioned this one last week. Yeah, Oak Street Health is it's in the right space. Especially if something like Cigna is gonna end up going, or Humana, HUM, or Cigna, Humana. I don't know the rest of them. Molina Health. Yeah, these just need a little bit more work. But if they end up working, um, that could be another sector that helps this market go higher. We talked about it. Like, what else carries the market higher? Molina Health. Like, is it these healthcare names and then these financials and then, some of these. Like maybe it's not energy, and then that's a good thing, right? So, solar leading the way. Throw Tesla into the mix. Throw some of these healthcare names into the mix, like Molina Health, United Healthcare, Cigna, and then throw some of these financials into the mix, like Schwab, SCHW. Look at Schwab. Schwab's starting to look really nice. If you were into slower names, what do we just look at? IBKR, um, and then Raymond James Financial, RJF. So there are some sectors now that are really starting to show some life. These financial names, move up, flagging out. So these financials, these healthcares, these a few biotechs. Tesla. I mean, yeah, utilities too. I mean, guys, there are things holding up really fucking well. Um, so yeah, I'm not quick to just like everybody's expecting just the markets to like die and roll over, and these aren't the same periods. I don't believe that our market's primed to just die and roll over. Could it? Yeah, maybe. But I'm seeing tons of fucking setups. Tons. Okay, Oxy, we see you. Hmm. I need to figure this one out. I need to figure out how to. I'd love to add this to my playbook. I mean, I hate buying dips, but when something's on clean support on a daily, and it's done it in the past. I brought this up pre-market. It's resting right on a perfect spot. I need to figure out how to get myself into this. Because if this ends up perking back up over all these moving averages, and I'd have loved to have owned it down here, but it's a setup I need to work on. Nothing that I can do with it. URNM. Uranium may be finding support on the rising 50. We'll see what it looks like later this week. CCJ acting well. Yeah, we'll see. Yeah, Uber's another one. It's been acting really well since earnings. I don't see a perfect setup yet. Guys, look, listen. Here's the thing. You only need to own 4 or 5 or 6 names in the entire market to double your portfolio. So instead of just like, getting the bobblehead syndrome, you have to make sure that what you want to own is literally fucking perfect. Otherwise, you don't need to own it. You only need a handful of names in the entire market. Like, yeah, it's cool to, be able to get yourself into 10, 12 green names and setups, etc. But if slowly pyramid yourself into a position, you only need to focus on 5, 6, 7 names in the entire 10 names. Like, focus on 10 or 12, but you only need to be in 4 or 5. to double your portfolios, but you need to be in the best names in the entire market, the best setups. That's it. You know, a lot of things look okay. A lot of things look okay. 419. Okay, here we go. Yeah, that's something to remember. A lot of things look okay. Like Uber looks okay for sure. It's strong. Like it's been acting very well since these earnings, since this massive volume down here in this gap up and pulled back. It didn't even go into that gap fill area, held the 100, built higher lows, pushed right back up. I mean, that's characteristics of a nice strong chart. After earnings. If you didn't have these moving averages, you'd say something like, well, you know what? In an odd kind of a way, that looks like Wolf. But ever since earnings, you know. But again, neither of them are totally perfect in my eyes, and you don't have to be in a rush to own them. You only got to be in 4 or 5 names to make an absolute fortune in this market. So it's just better off to be patient and let your setup and entry almost find you, um, and just be willing to pull the trigger when that setup and entry does find you. Yeah, I checked. You checked EMA versus SMA. Yeah, they are different. They are different. Like I said, one's just cleaner to my eye, but I don't exactly know how they're calculated. I know one probably carries more weight on certain time frames, but like I said, one's just always been cleaner to my eye. And again, if I'm seeing that it's holding the 100 EMA, that's good enough for me to believe that it can hold the 100 EMA again. It's just where buyers are stepping up. General area more so than like a perfect price. Believe me, there's not going to be some perfect indicator to tell you to buy something anyway. So, EMA, SMA has nothing to really do with that. It's just more, that's a method for trend following. It just gives you a general idea if the trend is up or down. You have to determine what's tight. You have to determine your position sizing. You have to be patient yourself anyway. You know, so they're different. But the fact is if the EMAs are typically trending up on the daily, on the 10 and the 20, the same thing's happening for the SMAs. It's hardly much different. It's about the same. They're both trending up, and that's just the general idea. And when you buy something, and when you're buying something out of tightness, you're still buying it over the previous day's high. You're still looking for relative tight candlesticks, to buy them out of. You're still looking for clean and simple bases. And all of these things pop up without moving averages, simple or exponential. Makes no difference. Like I said, it's more of the general idea of trend following. That's more so what it is. Tesla looking damn good. We'll see how this one pans out. Probably end up being lighter volume today would be my guess than these last few sessions. It's what it looks like. Charge point. Charge point, not bad. It would just be nice to see this thing flatten out for like the next week, man. It would be nice to see this thing flatten out. I don't see much in terms of price action to do here. Nothing I'm really excited about. Blink, another one. I know this infrastructure bill helped them out and helped out this price action, but it's not perfect. Yeah, this is the best case scenario, I think, for a few of these names. Just sideways for a few more days. Just sideways. And then EMPH, for those not in, over 320s, 321 could probably be like a new position or add on for some. Depends. Really depends about our overall market. Like I said, there's going to be days in which everything just kind of goes up. What has the sustained move after everything goes up? Well, that's going to come from the leading sector in the leading space. There's going to come a day in which everything in the market appears to go up. But what do you want to own on that day? You want to have a list of potential leaders you'd like to be in. CELH, Tesla, TH, potentially some of these lithium names, LTHM, this is acting really well. Some of these names are acting incredibly well. This is what you'd possibly like to own. It's just a matter of waiting for the proper setup. It's timing. It's not that we're not identifying things that are going up, right? That's not the issue. It's not the issue of being able to find them. It's waiting and timing them. Because we want to catch, this uptrend. Without too much of consolidation and getting chopped out and stuff like this. But the fact that the market has looked like crap and this chart has just held up going sideways, that's a really positive sign, especially after a really big move up. This didn't just make a move up. This went up almost 200% from the lows, from 40 to almost 120. And then it hasn't given all that back. It's just gone sideways. It's exactly what leaders do. It's exactly what leaders do. Yeah, this weekly consolidation is just insane. So we'll see. I know there's probably a lot of eyes on this thing. Also, their fundamentals are great. Big chunk of the reason it's probably holding up as well as it is. But market looks a little bit better today. Again, probably not a great reason to start getting aggressive out here with any kind of a meaningful buying. You always want to test the waters and see if you can gain traction with the things that you're opening, and then, that leads to a little bit more a little bit more confidence opening up the next and the next and the next. And you get a little bit of footing in the market, and you're seeing things well, and you're opening them up when you got the wind at your back. Yeah, I trade low cheats. So how do I value crowded trades versus less crowded trades? I mean, in a market like this, nice charts, they stick out like a sore thumb. So, they are pretty crowded, honestly, because there's just not many nice charts. In a really nice, healthy bull market, there's, you know, like 50 charts coming across your screen every single day that look nice. So, but in a really shitty bear market like we're in, or just a crappy market in general, there's only a handful of these stocks that look amazing. So, but it's more so about timing. It's more so about timing. A lot of people still, day trade and flip for the pennies, instead of just being patient in a nice trend. Yeah. LAC finding support possibly on the rising 50 again. ALB. Yeah, lithium's acting pretty well. But not tons to do. Yeah, oh wow, TNK. Son of a biscuit. Yeah, TNK. That's beautiful. NAT. Wow. Look at this candlestick. Holy shit. Wow. Yeah, some of these sectors and names are acting really well. TNK. That's wild. I wonder how. Yeah, STNG still looking pretty good too. Has refused to break down. I know it's not a strong sector at the moment, but do I think Croc is worth watching? No. No, you're. It's not that Crocs can't come back. It's not that Crocs can't go. It's just not going to be your best sustained move. Your best sustained move is going to come from the leading sector, or one of the leading sectors, and Crocs just isn't it. It's not that it can't work. It's not a terrible setup. Move up and it's just consolidating. TNK, you can't see the setup there. Move up and then just sideways consolidation. You're really trying to buy something as it's breaking out of this range. These tops seem pretty obvious. The big majority of them. This pretty clear area of supply right here. Right? Over the area of supply in a chart that's got good fundamentals in the right sector. Boom. It wasn't perfect. That's why I don't own it. But it's nice to see them continuously be strong. It was on my radar before, but it's not right now. But it's nice to see them working. Yeah, it's clean. It's clean supply areas. Tight supply areas. I want to buy something coming out of a tight supply area. That's how we limit risk. and we do it in a healthy market, and we do it in a right sector, and we preferably do it with companies that have solid fundamentals. If we recognize, that solar is the leading sector, okay, well, that's great, and we identify a tight area, and there's several charts to choose from in that sector. Which one should you end up going with? Well, the one with the best fundamentals. If a lot of things align and your focus is on the very best sector and the very best setups within that sector, so, you know, if you see EMPH and you see Run and you see Nova and you see SPWR and you see, whatever. Okay, so 3, 4 names all within the same sector. All right, all in solar. Well, which ones now have the best fundamentals? Interesting, man. Finding support on this rising 100. This will be good to learn. It'd be nice to figure out how the hell to get myself into something like this earlier. Down on this dip. Definitely a setup I would like to learn. Not one that's in my wheelhouse just yet. Maybe an undercut and rally from the day before. Maybe that was the setup. Buy it as it was going back through 63 and using stop at the low day. Maybe. Yeah, I don't know who that is, but maybe I need to figure that out. I like buying something as it's bouncing off the 100, and then maybe tomorrow I would consider it through today's highs. But it'd be nice to figure out how to even, get even lower. Like I said, probably this undercut and then rally setup as it rallies back through the previous day's low. So maybe a 63 entry with the stop at low of day. 60-cent risk. That's not a bad. It seems pretty dang tight. I didn't really think about it like that, though. So that's okay. But definitely not a bad move. $1.70 from that area. Not bad at all. CMPH looks good. Really nice. On. Okay. We'll see. Some of the names that were holding up pretty well last week are doing the same today. These solars, Tesla, these lithium names. It's just none of these are perfect swing setups. If they're gonna go, they'd have to flatten out some more. Like for LTHM, your entry was down there as it found support on the rising 20. But yeah, see, Wolf wasn't perfect, and if you buy it over those tops, if you bought 21, it just wasn't perfect. These candlesticks are still wide and loose. They're still wide and loose. So they're not perfect. It's exactly why I can't take it. Not to mention this market still sucks. America. Yeah, see, like these financial names still need tons of work. Emas, Morgan Stanley looks even but a little bit better than Bank of America. But yeah, guys, this could very well be another sector that helps you know helps the markets out. You know, a lot of everybody's favorite sexy tech names are kind of out of favor. The Apples of the world and stuff. But if these healthcare names, these solar names, these financial names, that could, like this Raymond James Financial, this could very well be enough to carry the markets higher. It could very well be enough. That could be all the market needs in terms of leadership. But United Healthcare, Humana, they just need a little bit more work. But I can't deny it. They look okay. They look all right. Choppy, but man, this COP has been strong. This ConocoPhillips is probably like the strongest oil gas name right now. Looks the best, really. XOM, PXD, CVX. Yeah. FANG, DVN, XLE. Yeah, we'll see. It's like some of these names, some of them are really strong, some of them not so much. Some of them look incredible, some of them look like shit. Yeah, it's in the right space. If Array starts to perk back up and gets into back into the 20s and tightens up on the right hand side of the space some, yeah, absolutely. Maybe could just be, a little undercut of the 50, finding support on the 50, tightens up. It just, you know, where's the entry? That's the question I'd have myself, is where would be the entry? Right now, I don't see anything clean. So, you want something almost obvious that everybody sees. Why? Because when that area breaks, you're not the only one buying right there. You're prepared for that breakout when it happens. And right now, there's not a clear and obvious spot where you'd be like, yeah, I'd buy that. Because as of right now, what did it do? It pushed up to the declining 10, and then it's starting to wick back. So it's actually finding supply at the declining 10. That's not the prettiest thing. I don't want to find supply at declining moving averages. I want to find support, or demand at rising moving averages. Something, something worth noting. This daily is a clear rejection so far against the 10. So, I'm not trying to buy this dip. I'm not trying to do anything. I'm trying to look for a really clean supply line and then buy through the breakout. Or, a previous day's high, some form of tight, finding support on the rising moving average. This is kind of a piece of shit name too, but this Pinterest is getting interesting as well. It's pretty soon coming up to this declining 200. Who knows? A few weeks, this thing starts to get back over and builds out above it. We could have something. Hopefully that'd be a sign that these names are just done getting absolutely creamed growth. That would be nice to see. I think right now it's just a matter of being patient for proper setups and even being more patient for a better market. There's going to be times when, everything feels like it's working, and that's going to be because you're in a healthy market. But just identifying, what sector you'd like to be in is going to be very important. What sector you feel the strongest, and identify, the names you believe are leading in that sector. Those are going to be the ones that give you the most stress-free moves. Just the most stress-free moves possible. Sonova doesn't look too bad either. We'll see. A little choppy for now. Kind of range bound. This AXSM doesn't look bad. If this 50 will catch up and tighten up. We were looking at it last week sometime in here, but it just wasn't right. It just wasn't proper yet. At least not for my eye. Not a lot to do in that one just yet. But they're holding up well. And I guess it would be nice to see, what is it, XBI? Yeah, see XBI's, it's heading in the wrong direction. So, owning biotech, and this is important, guys. Just because the SPY looks like crap doesn't mean, other sectors can't go. Like oil energy, we're looking really good in the beginning of the year, even while the SPY was going down. Why? Because XLE was going up. Okay? XLE was going up all throughout the beginning of the year, and the SPY was going down. Hence, all the oil energy names were going up. So I don't want to just, think, TH and RYTM or Dawn or whatever other else name, AXSM, like I don't, none of these names, I'm going to be looking at XBI. If XBI's dying, I'm not going to be excited to own any of these bio names, But if XBI were ripping and the SPY were coming down and, AXSM's in a really nice setup, I'm not going to hesitate. Why? Because, XBI is going up. That's the market I'm trading, So I'm not looking at the QQQ, for instance. Maybe I'm more concerned about the QQQ if I'm thinking about buying ON and I'm thinking about buying or STEM and ON and Tesla and, et cetera. I want to see that tech is going up. And I bet QQQ is going up today. Yeah, not a lot, but whatever's going on, it's not really affecting Tesla per se. Yeah, we'll see. So far, so good this morning, honestly. There are things that are holding up, like, really well. CELH is acting well. These solar names are acting well. These lithium names are looking really nice. This PLL's looking better. I mean, there's, things kind of shaping up, and they're shaping up well. But I just believe it's a matter of patience. And look, if we get like Sedge, this is looking even better. If we get a follow-through day in the market, identify the names you'd like to be in. Identify the sector you'd really want to be in. Identify the sector you guys believe is strongest. If the market registers a follow-through day this week, like on Thursday or Friday, you need to identify what names you want to own. because the party can get started later this week on a follow-through day, and if you're not ready, just because you believe the market looks like crap, you're going to miss a lot of nice charts. We'll see. Aura. Not yet. Almost. This aura looks nice. I keep bringing it up, but it looks dang good. Just thin today. Nobody trading the fucking thing. So it's kind of like a no-go today, but maybe over 98, and we might have something. Meanwhile, though, Tesla looks amazing. I took half size in it today. We'll see how it decides to hold up. If it builds out a little bit more, I would love to add to this thing. But nice little chart today. As soon as it got over yesterday's high, in my opinion. But we'll see. Small risk on a day like today. Futu. Yes, I bet PDD's suffering too today. PDD's actually holding up well. Man, a few more weeks for this name too. Another week. Sedge. Sedge. Yeah, this will be a good boost to the market. If Tesla could really take off today, this is going to bode well for our market. I mean, there's just, like I said, there's more setups today than there was 2.5 months ago when our market was in the downtrend. There's just more setups today. There's a lot more to be optimistic about. I guess a good question is, how's the dollar looking? Would be nice to see this thing drop. Boy. Would be nice to see the dollar come down. Look at this move by this fertilizer name. How's CF? Yeah. Okay. Well, maybe these names aren't done either if they build out another right hand side to their base. ALB, APA. APA's another one, finding support on its rising 20. I mean, see, some of these oil and gas names are acting still really well. You know, COP and APA. Damn, you're acting better than Oxy, but, you know, Oxy kind of found support where I was expecting. Las Vegas Sands. Interesting. Big ass consolidation. There we go. Yeah, I would wait a week. So I said I'd wait a week to take the lithium plays. Yeah, because the question is, where are you buying this? Like, where are you buying them? You know, what exactly is your tight entry? You know, are you taking them after they took out yesterday's highs? You know, do you notice them building support on, holding the 20 like LTHM is, right? But like, where was your tight entry? You know, could you have taken LTHM today over yesterday's high? Yeah, maybe. You know, that could have been one. Similarly to how I bought it down here, you know, or the ideal buy spot as it was taking out these, 3 days after it found support on the rising 20, and again on Friday it found support on the rising 20. And, this is essentially like a dip buy. It dipped to the rising 20, it held, and then now you're buying it as it broke through the previous day's high. If you took 33.50, okay, that's fine, and your risk is low a day. You're risking about $1. Okay, that's fine. So it's just a matter of being sized in properly. And do you believe that, the lithium names got more to go? But I already have some, right? And if I didn't, that could be an entry. I don't necessarily think it's absolutely perfect, but it's not bad. It's not bad. I'd rather see it, kind of get up to this 35 level and then just go sideways for, Tuesday and Wednesday, and then, maybe Thursday, you're buying the breakout through 35. But again, things are looking better in the market. Again, I'm seeing more setups. Solar still obviously is leading the way, and then we're just looking at some financials which have like been hitting my scan. I mean, they're the financial names I really won't play because they're slow, but identify other strong sectors, and it could be these healthcare, financials, and these solar names, and those are three now sectors in the market that are holding up well, and that is about enough to hold up the market. In the meantime, companies like Apple and Microsoft, they'll finish doing what they have to do. These companies I don't believe are going to die or go anywhere per se, but they still need to finish setting up, and when they do, they'll help, create a little bit more buoyancy for the market as well. But then again, then your leaders, without all that market pressure, these can go higher. So yeah, lithium, solar, renewable names, financial names, healthcare names. I mean, guys, there's quite a bit. There's quite a bit running around the market right now. It's just a matter of scanning and identifying where the hell money's going. But I do see several different sectors, and that's always nice. It's not just like one. We could even look to these like chargers. is another sector. But that for me, that kind of falls in line with you know, like the Teslas of the world, the Chargers, ATI. ATI's been holding up really well too. Nothing perfect about it just yet, but nothing to do. Not bad.
EVFM. EVFM.
But yeah, there's a lot of encouraging signs. The lithium names, the solar names, the financial names, CELH, which is I guess just kind of like a random name. But fundamentals are solid. Just a crummy market is all. But again, a lot more setups than a few months ago. A lot more. Oh man, this Suave. If Suave closed like this would be an incredibly tight day. Plus a bunch of higher lows on the daily. This Suave, if it closed like this, Suave's one of those that I would buy tomorrow. You very well could. Breaking back up into the range, coming out of a super tight day, building higher lows in a chart that's shown it can go up. I would love to see Suave close like that. That would be just absolutely ideal, picture perfect kind of a scenario. You never get picture perfect scenarios, but that would be nice. Suave's one of those I could buy tomorrow. But I would like to see it close like that. Nice. Yeah, Tesla's acting very well today. Well, hopefully it holds. So is on. On wasn't perfect, but I did like this, little supply basically. It's a nice little supply area. Basically looking at this. With your stop at low. Except I extended my stop. I'm not using low, so I sized down a little bit just to use the close of the 50. right? So size down a little bit, and then know that, hey, I'm risking $3. So just size in properly for a close of the 50. And that's how I'm playing on. Again, not perfect. I have to extend my stop a little bit. So what's even more important? Position sizing. That's going to be even more important. And if it sets up again, just absolutely ideal. And again, why am I buying something like on? It's putting in higher lows. It's one of the names I believe can be a potential leader in the semiconductor space. And it's finding support on the rising 50. So, I buy it as it's, had found the support and breaking back to the upside, and then I'm using a stop below the 50. Sedge. Okay. I got the memo. Sedge is another one I'm interested in. It's a nice chart. Okay. Sedge. Okay. Yeah, that's why. Yeah, position sizing's everything when it's trading. Yeah. Love the sizing down advice. Yeah, guys, it's you got to understand, like real leaders, they don't die, they consolidate, right? Or they find support on rising moving averages. But oftentimes you're going to get shaken out, and if things are really meant to go, you're going to get several ad spots along the way. You could pyramid into your position pretty easy. And what was one of the first things I said this morning? You only need to focus on, 4 or 5 names. You only need to be in 4 or 5 names to double your account. You need to focus on the 4 or 5 best names. Now, I'm obviously in a few more setups, but you'll realize by the traction you're getting in the names that you buy, whether or not you can add to them down the road. And you're bringing your average up into something that's working, not bringing your average down into something that's failing. That's exactly where a lot of people go wrong. They bought a dip or they bought a pullback, and then they're wrong, but they didn't buy a bunch, and then they'll buy a little bit more, and then a little bit more, and then a little bit more. And before you know it, they've dollar cost average down, and, they just need the thing to go up a little bit with massive position just to get back to break even. Yeah, that's not how I like to trade at all. I'd rather bring my average up into something that's working, and I'm not seeing red anymore. Like you buy Sedge today, and if you're wrong, okay, you eat the small little loss. But if you're right, and then you're adding more, as it breaks these tops at 120, and then you're adding more as it sets back up and breaks 340, and it's like you're just bringing your average up into that's something that's working, versus bringing your average down into a thing that's not. So I never want to do that. I'd rather bring my average up every time. On. What a nice daily candle. Oh, that was cool. We'll see. This thing likes to have unusually big candles on the front side. Yeah, sometimes the way I look at it with with sizing down, especially in a market like that, you're just taking like a pilot position. You know, for some of you guys, it might be like 4%, 5% of your total equity. You know, if you had a $100,000 account and you're like, okay, $50,000 position in ON, or sorry, 50,000. If you had a $100,000 account and you're like, okay, $5,000 position in ON, you're not going to be taking that many shares, and you're risking $2. You're going to own like 70 shares or something like that, 60 shares. been acting better this morning. Man, I need to study this setup a little bit more. I'd like to figure out how to buy these. This could have been a nice undercut and rally after it found really support on the rising 100 again. Could have been a nice entry. Didn't even think about the undercut rally here. Super low volume though.
EZFL. GMGMT.
This Netflix has been acting better recently, but boy, it's got too much overhead supply to even consider playing this damn thing. Neo, nice. Someone's been buying the hell out of Neo lately. FCX, I think that's copper name too. FCX is copper. Maybe. Copper's getting its act together too. LNG bounced right off the 20. SLB right off the 200. Interesting. Chart's not so bad. Mosaic. Big move off the 200 for MOS. Interesting look.
IMT.
Win. And then I saw Las Vegas Sands too. Maybe these are bottoming as well. Interesting. Las Vegas hotel chains, huh? I think that's the second one I see on my scans. Make it the third one. Now MGM too. Interesting. They're definitely not ready, but far from ready. But it's nice to see, a handful of these names on my scans. I just saw Wynn, MGM, and Las Vegas Sands all on my scans. And, well, LVS doesn't look that bad, honestly. LVS does not look that bad. It's got quite a bit of overhead, but, definitely putting in a base. It's not perfectly clean, but... And then here's Penn Gaming, and then recently I just saw DraftKings, and then you're seeing these Vegas names. Wonder how much of it... Oh, wow, this is a nice one. SRPT. Wow. Nice chart. Interesting. SRPT. Let's see what happens. Tesla's looking and acting amazing. Yeah, this PLL looks damn good too. It'd be nice if this maybe just puts in an inside day tomorrow. That would be very constructive. Super tight inside day, nice tight day, holds the 20. That would be absolutely ideal. And PLL's a really nice chart too. I mean, higher lows, textbook, fucking textbook. Higher lows, lower highs in the right sector. I mean, very nice. It's perfect. HL. This is a silver mining name. Interesting. Wonder how these silver and gold names are starting to look. SLV. SLV. May have found its lows. We'll see. How's gold names looking? Gold still looks like crap, but okay, maybe Neem is building out a base. Who knows? A lot of names might be done with their descent. Nothing to do in them. This NOC is incredible daily. Slow as turd, but that's a damn nice daily base. We'll see. NEP. Ford too. Ford might be finding support here. In the rising 50.
Sing. PTOI.
Yeah, I don't see a ton. I mean, a couple of little pilot positions today to see what sticks. I wish one of them would have been Oxy, but for an undercut rally setup. Meanwhile, these financial names are acting pretty well. It would be nice to see, something else pull up with solar. Otherwise, it's going to be too much for solar to carry the market all on its own. But, if you had like solar, healthcare, and, some financial names, now we're talking. Now there's a little bit of, we'd say market breadth, right? Like there's participation going on and not just one sector. It could show that bulls are in control in a handful of places, and that's always nice. That'll bode well for the market. If that gives a boost to the market, and then Apple and Microsoft can kind of find their footing, Um, you know, like I said, there's a lot more to be excited about now than there was a few months ago, strictly because of how well some names are acting. It's totally fine if these oil gas names want to roll over. I don't mind that at all. But maybe a cup and handle setup on this CCRN. Who knows? Just need some time. Choppy. What's up, boo? What's up, Mrs. Hero J? GLRE. Let's see. Yeah, but its average daily range is 1.9%. It's a no go for me. It's too damn slow. It's also incredibly thin and $8. I mean, it traded like 60, 70,000 shares a few days ago. I mean, I wouldn't want to show up and buy 20% of. I mean, if I bought something like this, realistically, it's about 20,000 shares. And not only does it move too slow, it's very illiquid. So yeah, I mean, you've got the right idea. Find names that are faster. Move up, pulls back, starts to rebase back out, finding support potentially on the rising 20 or the 50. Gets tight, gives you a clean supply area, and you buy the breakout. But the fact is it moves 1.9% a day. I mean, you know, that's just too slow. It's just way too slow. At that rate, you might as well put your money in a CD. Kidding. Uh, but not kidding. You don't want to be in something that slow. Find something faster. But you got the right idea. It looks like, your eye works well for a halfway decent setup, and that's what's really important. Now, look for setups like that in a better market and in the leading sector. I don't even know what GLRE does, but, what sector is it in? Insurance. So, okay, look at a few other names in that sector. Okay, what do we got? We got SPNT. Looks like shit. You got RNR. Looks like shit. RE. Looks the best of the group, but 1.18 ADR. But, looks the very best of the group. Weeks probably some halfway nice consolidation. Yep, sure enough. Above all moving average on the weekly, that looks like that could be your leader. But again, deathly fucking slow. You've got no reason to be in something like that. Zero reason. But again, look, you're identifying a halfway decent setup. That's half of the battle. Is however you found it, however you scan for it, and then your eyeballs work, right? Like, okay, yeah, that it's made a move up, it's flattening out, it's getting tight. It's and now the question is it in the right sector? I'd like to see more group participation. Fact is I just got done looking at a few of the other names and they look like shit. You know, this one and GLRE are probably the two best looking that I just looked at, but really, they're so slow. You know, I mean, like STEM, 7.96% ADR, almost moves 8% a day. So if you have the direction nailed on this thing and you understand what direction this thing wants to go to, okay, hypothetically, STEM and GLRE both give you 5-day momentum bursts, right? So GLRE moving 1.5% or 2% a day and gives you 5 straight good up days. Okay, it just went up 10%, maybe 12, or maybe 8, somewhere in that neighborhood. Versus STEM, if it gives you 5 straight good up days and it moves its about average daily range, I mean, it just moved, you know, 25, 30, 40%, you know, at 8% a day. So what would you rather be in? Something that just moved 8 or something that just moved 30, you know? And then again, it's just a matter of position sizing. And then what sector is it in? And buying it when, you know, it's coming out of a nice tight setup in a healthy market, you know, when the market's trending up. You know, and again, the market's pushing out halfway decent today. It's not breaking down. You know, it's for now, it's going up, you know, and things like Tesla are going higher. You know, which is exactly why I bought it over yesterday's high. You know, guys, nothing too magical about it. You know, nothing too magical about what I just did. You know, SPY's pushing higher. Tesla's got a nice chart and it's breaking out over Friday's high. I mean, you know, and again, Tesla's even kind of slow, 3.5% a day. But, you know, Tesla could be a leader. You know, Tesla could be a market leader, like the number one name in the entire market, you know, pushing higher. You know, this isn't just some old, you know, fly by your pants, just random name, random setup, random technology, you know, name no one's ever heard. No, like, you know, people are dying to own this name. You know, that's, I even said it on Twitter. If we got a follow through day and this thing sets up even more, I would love to be adding, you know, over these tops too, over the 313 area. But ideally, you know, it doesn't break below my stop out spot, and it sets up just underneath 100 or 313, goes sideways a little bit, breaks out through there in a healthier while the market's uptrending. You know, and then you've just brought up your average into something that's working. You've pyramided yourself into a bigger position, into a name that, you know, you'd like to own a bunch of. But QuadraTrader, you got the right idea, man. You got the right idea. Now just, you know, put it all together. Put the pieces together. Make sure that the name's not totally slow. You know, you want to see your money actually move. And then it's just a matter of position sizing. Position sizing is everything. You know, we'll see what Tesla ends up, how it ends up finishing, but you know, that is a was a halfway constructive setup. You know, like I said, my bigger concern is the overall health of the market. You know, if you're onto the right names, they're gonna go, but they're not gonna do much in a crappy, crummy market. Even more important to remember. And you know, if they're really gonna go and go much higher, you know, you'll get an opportunity to add a handful of times. You know, let your pilot position push out. You know, let yourself gain some traction. Yeah.
RSPI.
ON wasn't too bad either. Wasn't the tightest, so, and I extended my stop, so I really made sure to size him properly on this one. Something that I told myself I would work on going forward is, you know, making sure I'm being really, you know, thoughtful about my position sizing so that I can, you know, widen up my stop a little bit on certain setups. Well, I wouldn't be in GLRE, but if I were in GLRE, what would be my stop? Well, it depends where I'm buying it, and right now I'm not buying it anywhere, so it's tough. If I were buying it realistically, over this $8 area looks the best. Over $8, and then I would be using low of day as my stop, or this pivot low, this 780,
RNLS.
area, or the close of the 50. I mean, it's just an extra 4 cents, but yeah, about 25 cent stop on this name, but I wouldn't be playing this shit. It's too fucking slow. The close of the 50, if it took out the $8 area on healthy volume, you take out 8, good volume starts to push back up over that little range. You know, I mean, it's minus a couple of little spots. This is your range box right here. Let me make this white. You know, there's your range right there. But it's just a piece of shit. Whoops. Yeah, okay. Understood. This one was one I was hoping would close really tight and then buy it over today's highs. We'll see how Suave closes, but if Suave begins to push, maybe over yesterday's high or Friday's highs, could be one of interest as well. You would just, your stop's pretty wide here. $10. I don't know that I'd like a $10 stop myself. But was hoping it would close really tight today and then buy it tomorrow. Like I said, it's not something you may get, so that would just be it. It is what it is. One of those. It just is what it is. If you can't take it, you can't take it. Yeah, man, 2-3 more days for LTHM would be a nice ad. Array just needs a little bit of work. A lot of these, names look, these setups look really constructive. That's the difference between right now and 2.5 or 3 months ago, or there wasn't any of these kind of setups like EMPHs, FSLRs, SPWRs, CELHs. Like, guys, there was none of this a few months ago, and I mean absolutely none of it. So, there's so much more to be optimistic about in this market than it was. And, everybody's now talking gloom and doom, when there's so many setups. Just like everybody's all euphoric and super high in November of last year when, setups where everything was starting to break down. But everybody just figured that first little breakdown was like, it's just a, run-of-the-mill pullback when really things had been pulling back all year. Names like Carvana and Peloton and Zoom and SE and ASAN and Upstart, like so many names had really started to break down, and everybody was still euphoric. Everybody was so excited about, this market that we were in. When really, things were starting to break down. I remember last year in November, I was like, things look like shit. And now, everybody's just the opposite. Everybody's super pessimistic. Everybody's gloom and doom and about the, deflation in the market and the inflation in the market and how bad things are, etc. But, meanwhile, I see so many setups, Tesla, CELH, EMPH, Suave, Wolf. I mean, there is just, shit everywhere. STEM. I mean, there is just, some semiconductor names. There is just setups everywhere. I mean, guys, they are far from perfect, and we are far from in a good market. All right, I will tell you that. But in terms of, things setting up and looking really well and constructive on the daily, meanwhile, the market's kind of just trying to get its footing, this shit is as good as it's going to get. Honestly. It's as nice as it's going to get. and again, everybody's doom and gloom, and I'm seeing setups. That's why I'm not. That's why I'm having a hard time predicting the market, going lower. Uh, and I've said this. I believe our SPY is in a stage one base. It could just base out for a really long time, but I don't know that we just, roll over and go see, these new lows. NQ's pretty much traded in this, little channel here. And, I have a hard time imagining this thing just breaking down to this lower trend line. I just don't see it. I just don't see it. Too many names holding up for that to happen. Way too many. And again, potentially multiple sectors holding up well. Solar being one of them, namely. Solar, financials, healthcare. And then again, a name like Tesla holding up this well. That's just a boost for the market. And like I said, if Apple and Microsoft can find their footing, I think things are even better than people think. Yeah. Yep. FLNC looks pretty damn good. Nice eyeball, man. It's not perfect by any stretch of the imagination, but yeah. Move up. It's gone sideways. It's getting tight. It's starting to, maybe put in these higher low, lower highs on the daily. Yeah. It's not bad. Few more days, healthier market. Would be nice to see, its counterparts hold up really well. Look up what sector it's in. Look at what other names are in the sector and see how they look. How does PWSC look? Random. That's what it looks like. But, again, what does it look like to you? Pretty clean supply area at 1850s. 1850s, pretty clean supply. Stuff like this can work. A little random for me, it feels like. Guys, I have said this before and I'll say it again. You only need 3 or 4 names in the entire market to do really well with your portfolio. Focus on the 3 and 4 best names in the entire market, especially if you're new at swing trading. What's the number one group in the market? Right now it's solar, in my opinion. Try to focus on the very best setups in that sector. Man, this one was a good scoop today. Acting really well. It's nice to see. How are these other EVs looking? Rivian doesn't look too good. Lucid doesn't look too good. Neo looks okay. Neo looks alright. Thing with Tesla is it's like the only one. It's the only one in this EV space acting well. But the thing is Tesla's not just like some EV car company. They're basically a tech company. We'll see. Again, if this market rolls over and rejects this ascending 50 even on the hourly, here, we'll see. It's not going to help out anything. Doesn't matter what you bought today.
TLRTF.
But his GM's acting much better too. GM, hopefully Ford finishes getting its shit together. Yeah, some of these aren't so bad. Potentially a nice little bull flag on Ford. We'll see. Would be nice to see it give me a nice little supply area. I don't see one just yet. Would be a cool one to own. I personally like Ford, even though I own a Ram. I think Ford can go on to have the number one selling electric truck. I mean, there's so many damn F-150s on the road. I wouldn't be surprised if they all eventually go to the electric truck. Here we go. Besides getting its act together a little bit. EMPH. Yeah, hopefully Uber a little bit longer on this right hand side would be ideal. This REG ad's crazy. Wix, PDD, Lowe's. Airbnb is another one too. Younger IPO. I wouldn't mind owning this name as well. Nice little base. I'd like to see it maybe break this 126 neckline. But not yet. Same with Plug. We talked about Plug a little bit last week. I just didn't think it was ready. I thought it needed to build out a little bit more. Hopefully this 50 catches up and tightens up. And Plug could be another one of those that, ends up making a much bigger move. Just not ready. But, names like this, Schwab, Raymond James, Financial, and Interactive Brokers. I mean, even Morgan Stanley. I mean, some of these banking financial names are starting to look really, really, really good. But again, just a little slow, but that's irrelevant. I'm more so thinking about the sector and how it'll help or hurt our market, right? And if we have, a few leading sectors or a few sectors getting money, that's nice to see for market breadth. We're just getting market-wide participation in a handful of sectors. And, if that turns out to be true. And again, these things are like setting up in a not so good market. So if these finish setting up and then the market, registers a follow through day in the next week or two, the market can continue much higher, guys. If we have about 3 sectors holding up. So it's good to know. Also these like waste management names, these have been holding up really well too. It's not really like a big sector, but WM, let's see. WM's the biggest, but I thought I saw a few of these look pretty good. Yeah, RSG, WCN. Yeah, these look good. WCN, Waste Connections, GFL. Not so much. But, the biggest ones in the sector look pretty good. So, there are things, man. There are things much more than a few months ago. Again, lithium's another sector. So, guys, there is money flowing into the market. It's just, it's where, being selective. Scanning so you know where, and then, having a handful of names that you'd really like to own.
GHVNF.
For me, it was a little bit more money in solar. I mean, my main top watch was Tesla this morning. I'd like to see it register, the market get a follow-through day. And then maybe, you're buying Tesla up over these 113s.
HENC.
If we can get a follow-through day. And then solar. But otherwise, guys, there's really not a ton to do in this market. I don't see tons of setups. We said this earlier last week. Like, everything needs another week. With the very small exception of, Tesla. Maybe it didn't need a week. Today could have really been the day in which it started to take off. But guys, this market sucks ass. So what did I do? I sized down. That's all. That's all I did. I'm okay to take the setup. Market was pushing a little bit higher today, but I sized down. That's all. There's nothing to, get aggressive in this market. And plus, your own positions will tell you, how the market's looking, because you believe, you're in the leading sectors. I'm focused on solar, and I'm focused on, a few of these possibly energy names, a couple of these tech names. If you believe you're on, your eyes are on the leading sector, then your own portfolio should tell you how things are looking. Benny, what platform do I use to see these charts? Yeah, Toss. I don't execute through Toss, but yeah, I do my charting through them. I also built my scanners through them, so I like their platform. Pretty user friendly. PLL's looking good by the day. Jesus. Another name that's acting well in the lithium space, SGML. Finding support on the rising 20 today. What's my take on everyone watching the same 5-10 names now? Nothing. The names are crowded. I mean, there's a lot more names now than there was a few months ago, so they're not nearly as crowded. People are impatient on these consolidations. Like, everybody was watching CELH for the longest time, but now it's just gone sideways for weeks. Who knows what everybody's patience was really like. And again, how patient are people being to wait, for the market to really shape up? That's what really matters. Problem is everybody's impatient, you know, and they're trading this chop. Yeah, everybody is watching them, but you know what? If they create a really clean and obvious supply line, well, then a lot of people are watching them to buy that breakout when it happens. That's the other benefit, right? Yeah, you could say that they're crowded, but the fact is they're holding up, not because we're all staring at them, but because institutions are accumulating. I mean, let's not pretend that a chart gives a nice little tight, clean entry, because all of FinTwit's watching them. No, it's because institutions are supporting the thing. So yeah, it's just a matter of patience and doing it when it's in a healthy market, guys. It's the last letter in canceling. M stands for market, and understanding market direction. If your market direction sucks and it's going down, like ours is clearly going down, then there's just it's the problem is that nobody's got the patience. The setups are the same. It's supply and demand. And if you get a really clear supply area and it gets nice and tight, then all you have to do is, get in to limit your risk. Like, you're just here to limit risk on your entry day. That's all you're here to do. You're here to limit risk on entry day. So, but if, CELH and Wolf and, here's the thing. The nice part is that, these Teslas and Wolf and CELH and FSLR and EMPH, like a lot of the, and STEM, it's in different markets per se. Like, some are semis. So one's an EV, one's a solar, one's a, CCJ still looks good. One's uranium, one's a tech name, one's a, so it's like there's strength, and then some are financial names, like we were just looking at RJF. It's not perfect, right? Or even OSH, Oak Street Health. I guess this one's, kind of breaking down too, but it could still be, just building out longer. But the point is like we've got halfway decent setups in multiple spaces throughout the market. So what we're seeing is good, halfway decent market breadth, right? It's not like just, oh, it's just energy strong and everything else is going up and or everything else is going down. The only thing going up is energy. That's not actually true. It's like I'm seeing lithium names, I'm seeing some EV names, I'm seeing some, battery storage names, I'm seeing solar names, I'm seeing, some healthcare names like Cigna and Humana. They just need a little bit more time, but, they're holding up well. And so, yeah, like I understand what you're saying about a lot of people watching the same names, but again, that's also what's going to cause a really nice breakout because a lot of people's eyes are on that supply level, and when it breaks out, you're not the only interested buyer. You got a lot of other eyes on that name and on that spot. And, that's what causes a really quick move away from your average. Now, it's just a matter of, can you size them properly, and can you place your stop where it's supposed to be and hold through the ebbs and flows and do it within a healthy market. But yeah, guys, there's only so many names are as they say, the peacocks, right? Like they're showing their feathers in a shitty market like this. Like Tesla showing its feathers. It's showing you like, hey, I'm incredibly strong, despite a crap market. And believe me, this is a crap market. This is absolutely a crap market.
GLDRF.
But don't worry about a name being crowded. You know, me and whoever else on FinTwit aren't what making this thing go up. What's making this thing go up is it being in the right sector and it getting institutional support. And it looks like my screens are frozen. Oh, this isn't fun. That's silly. Some names aren't coming up. So much for this being a wonderful platform. Yeah, I think in this market, it's just a matter of patience, guys. It's just really a matter of patience. You know, and, learning a little variation of entries so you can participate. Like figuring out how the hell I could have gotten an Oxy today because Oxy's acting better off of this 100. Would be nice if my charts were loading. Here we go. I don't see a ton here to do anymore today. I don't see a ton to do. We've scanned pretty well today, and there's just not a ton of setups. Tesla was the best thing I was seeing today. And really, this market is not helping. Lithiums just need a little bit more time. Energy names maybe just need a little bit more time. That could still be where the money flows. Who knows? Yeah, yeah, but what did I do? So I saw on Twitter you bought some Teslas, so you bought it even though market is shit. Yeah, but how did I buy it? Right? I took way less size. Way less size than even a one normal position size. And if it's meant to go higher, it'll go higher and then it'll set up and I'll be buying it, braising up my average. And if I'm wrong, then my loss will be super irrelevant and small. But I would like to add to the position. I'd like to add risk, right? I'd like to make it a full size or a 2x position. I'd like to make Tesla that big of a position, but how do you do it? You do it as the chart's working for you and you bring up your average in another really nice clean setup. Right now, I just don't, I don't want to get aggressive buying anything. I don't want to get aggressive buying too much of anything, you know, and I want to focus on the leading sector. And Tesla's not in the leading sector, but it could very well be a leading name, you know. It could be the one that ends up really dragging up every other EV or car company, so I don't mind owning it as long as I knew what my risk was when I got it. I knew I was buying 304s, and I knew that my risk was going to be, 298. So I know I'm risking $4. So I just have to make sure I know what my potential loss is with the size I'm taking. That's what matters even more. And I ask myself before I buy the thing, am I comfortable, taking that loss if it's going to be $6, yeah, it seems like a big, stop, but if you're sizing it properly, it doesn't matter. I was able to buy a 5% portfolio position, and my risk is irrelevant. I really don't mind losing, just over $1,500 on a trade like this all day long. No big deal. I won't lose any sleep. So, one of the things you just have to keep in check is your frequency. It's like I don't want to just like open Tesla, open something else all in the same day when I'm not like getting any traction on anything that I own. So I'm very selective. I own CCJ. I bought it at 25.60s, and then I bought some at 27.30s. So my average is, it's down here in the 26s. I was using the 50-day as my stop. So it hasn't come down to the 50-day yet or closed below the 50-day. I have a, pretty big thesis for what uranium can do, but again, they're not acting the very best right now. But here's the thing, this thing kind of just made this really nice big move up, and I really needed a better consolidation. So I'm not too unhappy. Yeah, I don't love seeing money go back, but CCJ, ENPH, I scooped a little tiny piece of on today. Sedge as well, but it doesn't look like that one's going to work. Super small piece. STEM, TAN from much lower in the mid 70s. Tesla today. UE from the slower trend line. And I don't own URNM, but it is just a watch for the whole sector. I don't own ALB. ALB's lithium. So the only lithium name I own is LTHM. So I bought it on this day coming out of these 3 tight days in which it held the ascending 20. Bought it here. Technically, I bought it up here, 32.40. But yeah, ALB, SQM, LTHM. I did wish I kind of bought this Oxy dip, but I did not. So Oxy's acting pretty well off this 100. And you could see it's acted pretty well off the 100 in the past. Hence these little highlighted areas I had highlighted for everybody. It's definitely a nice little area of interest. Held it to the T. And, now they're looking better. Like Oxy looks good. We'll see. Oxy looks good. I was talking about it today in pre-market. Would have been nice to, would have been good practice and maybe a nice little undercut rally setup. Is it undercut Friday's lows and then rallied back through them? You would have been buying at 63 with your stop at low of day. 63 with your stop at 62.50. 50-cent stop. That's not bad. But I didn't buy it. But it's got a that is a kind of a setup that I have to my playbook, but I just wasn't really thinking about undercut rally today. But yeah, that's in case anybody's wondering what a textbook undercut rally might look like. There it is right there. Not only did it undercut, it held the ascending 100, which it's done a few other times. And that should have been something that, as a trader, I took note of, right? And I even said it this morning. It was, if, I don't know if I was already recording or not, but, whoever was here had heard me say it. But yeah, definitely an area of interest. And, what's it doing? Undercut rally held the 100. It's perfect. Another undercut rally held the 100 right here. Could have been another perfect undercut rally under that red day's low, and then you bought it as it was turning up past 57.25 basically. With your stop at that low of day. So there would have been your risk, and then look at what your reward ended up being. Those undercut rallies can be, risk less than 1%, and then, you make a 30% move. But yeah, it's done it a handful of times. Even did it down here basically. It's perfect. But again, I wasn't prepared for it. I was looking at it. I liked the area, but I just didn't want to buy the weakness. But yeah, there's plenty of sectors showing strength. Is EQT holding the 50 again today? I mean, I guess it'll only be hindsight if it does, but it would be nice to see this thing pop back up and flatten back out. EQT has shown the ability to make a big move. And who knows? You just need to manage what you're in. CCJ, EMPH, LTHM. On may not work, but I extended my stop on as well. I'll be using the close of the 50. So it could even break below today's lows. I sized in super fucking small. I'm very happy to add into any of these higher, Yeah, it would be like, oh man, I wish I would have taken my full position down there, because you'd be up more, but I don't want to. I'm not going to kick myself over something like that. I'm just going to continue managing what I have, and I'm going to continue looking for the strongest sectors in the market. Where I believe the sector's most likely to make the biggest moves. That's going to continue to be my focus. And that should be your focus as well, guys, because eventually this market will turn back up, and when it does, I said it at the beginning of the stream. You don't have to own 10 names like I've got. 1, 2, 3, 4, 5, 6, 7, 8, 9. Yeah, you don't need to own 9 names like I do. You don't need to own 9. You need to own 4, 5. Plus I just heard Biden say yesterday that inflation only went up 0.1 last month. Everything should be great now, guys. Everything should be great. Inflation's peaked. It's official. Biden said it. Some of these biotech, these therapeutic companies still look good. I don't have any exposure to bio companies right now, but who knows? There are a few that have my attention. This SPRT and AXSM might be the only two that I really have any kind of interest in. The rest, I don't. RYTM, after the big move, they dropped an offering. They don't look so good right now. Not right at the moment. What was the other one? dang, I don't remember. ALT. They got absolutely crushed the other day. And this is what I don't need to happen to me. I don't need to wake up, to being up 50% and then red, in the morning. You get to your screens and then you're red on a name you were just up 50% on. And that's what will happen to these bio names. I don't need to deal with none of that shit. Swab's the other one. Swab's the other bio or medical name that I've got tons of interest in. This thing looks like a leader, like an absolute leader. So, there are names. Yeah, was Biden sleep talking? I have no fucking clue. I have no fucking clue what's going on over there at the White House, but all that shit's out of their control. I mean, it's out of our control, should I say. It's all in the Fed's control, but it's out of ours. This PWR too, I've kind of got some interest in it. It's a little choppy, a little on the slower end, but this thing could really make a big move. I'd just like to see it set up properly. Some of these names are acting much better than others. How's CEG looking? Yeah, CEG's looking, man. Molina Health. Yeah, you see like MOH, UNH, MOH, Humana, Cigna. Yeah, I mean, I believe, this sector can also really help, get the market nice and buoyant. How's AbbVie looking? AbbVie needs a little time. But yeah, this sector can really help the market. Really big market cap on some of these names. Here's another pharma name that's looking really good. ALNY. So yeah, some of these pharmaceutical bio companies, I mean, they're still looking damn good. Suave, ALNY, SPRT. Or SRPT. Yeah. Some of these look really good. Cardinal Health, here's another one. I thought I liked CCNC or something. What was it? CNCC or some CCNC. I don't remember. Something about I gotta find the fucking ticker. I don't know. There was another one too. But yeah, they're acting well. I'd like to see CSIQ hold this 50. Maybe this could be a pullback buy setup tomorrow if these solars decide to go over this 40-50. I don't know if it's CNCE. No, it's not. I don't think there was an E in there. Yeah, but you know what? This one doesn't look too bad either. I mean, you get my point, though. Money's definitely still... CCRN. Here we go. CCRN. This thing had shown you the ability to just go, stupid. I was actually looking at it down here, believe it or not. Why? Look at how tight that red day was. Found support on the rising 10, move up, and then just, got tight. Yeah, these candles are ugly, but, I always like to give the metaphor of like that little metal door stopper, behind your doors. Like that little spring. Move up, pull back, higher lows, move up, pull back, and just get tighter and tighter and tighter and tighter. And I didn't buy it because I didn't think it was super clean, but I did have this alert here, and I just never took it. And then, look at what it ended up doing. Fucking A. Basically buying it at 1930, and it goes to, a 50% move in 3 weeks, basically. And who knows? Could this be a nice cup and then a handle setup? Maybe. Maybe. I have no clue. But again, just the point is, if you scan, you'll realize some of these charts are holding up well above moving averages. They're in the same sector. They've shown you the ability to make a move higher and a big move quickly. It's just a matter of identifying a key level, a tight area, and buying as it's breaking out in a healthy market. You've already identified that money's going into the sector. You've already done that part. And that's obvious by the look of CCRN. That's obvious by the move of Suave. ANLY or ALNY. It's like some of these charts are holding up incredibly well in this crummy ass market. And when we scan, we've got still shit that looks like Piton. It's like I don't want to buy Piton. I want to buy shit that's holding up like Suave. They can just keep going. They're going to be the first to continue higher when this market's done absolutely smashing all these other names. But yeah, it's like scanning. We just identified 5-6 names in the exact same sector that all look pretty good. These pharma bio names from AXSM to Suave to CCRN, right? Now it's just a matter of finding a tight entry. It's like we already know money's going to that sector. It's why those charts are holding up. It's why they look so strong. It's why they look as good as they do. It's why they look as good as they do. It's just a matter of tight. How tight is the thing? How much risk do we have when we're buying? Those are the questions that matter even more. This ALB, these lithium names look damn good too. Yeah, a lot of what's going to end up happening, to a lot of the names that you own, is just dependent on market direction. If the market just continues to roll over and die, it almost doesn't matter what you're in. But the leaders, like a FSLR, they won't die. They'll just keep consolidating. It's what it appears, right? FSLR refuses to die. It just continues to consolidate. That's why it's so important to focus on the leading sector. They're going to give you your biggest move when the correction's done. CCJ is acting well today too. We'll see. I'd really like to see this uranium space shape up. It's such a small sector, though. That's the only problem. It's not a lot of names, so really too many retail eyes. How do I define leading sectors? ETFs are a really great way. What ETFs are holding up the best? TAN or, you know, um, or, QQQ. I've got this little list here. So yeah, you got to ask yourself, how's the underlying ETF looking? If XLE looks like crap, although it's bouncing today, you know, it's not above all its moving averages like the 10, 20, 50 like TAN is. Which is why, I mean, at least TAN's above the 50, right? It's below the 10, 20, but which is why its names in its sector look a little bit better than the oil gas names right now, or something like IWM, or IWM. That's why small caps don't look so good, right? Because IWM's below all its moving averages. Or XBI right now. It's below all moving averages. So the biotech names don't look so great. These home builders look like shit. So something like, PHM's going to look like crap too. Below all moving averages. So yeah, leading sector, you can do it by ETFs. And obviously, just like you said, based on 1, 3, 6 month price performance, yeah. Definitely another way.
EMED.
Huh. Oh, one too many, huh? Okay. Yeah, it looks like crap. And look, you're not always going to be absolutely right about what the leading sector is, even though sometimes that can be fairly obvious, like with solar. But you just want to identify a handful of leading names in their respective sectors, right? Like TH, for instance. TH is a leading name in its respective sector in the biotech space or the healthcare space. And it's made a big move up, and it never died. It's just consolidated. It's just, it pulled back, and then it, made a higher low. It found support on the rising 50. It's pushing right back up. It's starting to go sideways above the 10 and the 20. Show us a tight day and, break out in a healthy market. And that's all you really need. And that's it. Where's your tight entry in a healthy market? It's like the chart's not perfect and the market's not perfect, but if you get both of those that are lined up and you get a halfway decent setup with a clear supply line, and this thing's breaking 1450s in a couple days while the market's pushing higher, it's a no-brainer. This thing's showing you ability to make a big move, and then it's just consolidated. And this sideways action is great.
Mex.
Yeah, it just looks like this market's under distribution. That's all. This market doesn't look good. This market does not look good. That's why getting aggressive out here is not the right move.
Mex.
I don't know, guys. There's really not a whole lot to do. Set your stops on things you have. Don't get aggressive chasing anything towards the end of the day either. Just no sense. Be sized in properly. Take your pilot positions. If things don't work, if your pilot positions don't work, don't just get aggressive to open more. If you can't gain traction on really, really small size, out of, some halfway decent setups, then, bigger size isn't going to do the trick. And fact is, the SPY right now looks like ass, and it will just drag everything else down with it. What are we getting right here? It's a clear rejection of the 50 on the 60-minute. Clear as day. On the daily, it didn't even go to retest the 10. So that's not too great for now. Again, it's early, so still got a couple hours left in the day. We'll see how it closes more so than anything. But, the market's got a bunch of overhead right now. It's got a lot of overhead supply. But like I said, the difference is now the market has, much better looking charts. Tomorrow will be an interesting day for some of these names. To see if like uranium's actually found support on the rising 50. To see if Oxy actually finds support on that rising 100. Oxy looks great though.
CGSI.
Da, da, da. We'll see.
CGSI.
It's not a ton to do, guys. Not a ton to do.
CGSI.
Manage what you have. Make sure you're sized in properly. Let moving averages work. And just identify strength in leading sectors. And again, even I could be better about learning these kind of setups or executing them. This undercut rally, should have maybe pulled the trigger on this. It's acting so dang well today. This Oxy, it's acting really, really well. Almost at how you would expect off of the 100. It's not the first time. Conditions will change, in my opinion, in Oxy when it fails the 100, and then when it retests it, and then it shows up as supply. When it shows up as resistance. But the fact is that every single time, the 100 has shown up as support. And obviously the more something tests support, the weaker it becomes, but it's still confirmed support until it's not. It's something good to remember. Like, something is support until it breaks below and then retests and then it rejects. Then the conditions have changed. But until then, you have to, in your mind, sit there and think to yourself, the 100 is support. Just like it's shown up to do, over the last couple months at that, at that level, at the 100 moving average.
MIGI.
And why would you expect anything different until, the chart shows you something different? And sure enough, had you bought that undercut rally setup today, you'd be looking great. 50-cent risk, and you would be up about almost $2 now, 4-1 so far on your trade. That's really great risk reward. And it looks like crude's pushing higher. It looks like Tesla's maybe bouncing here a little bit, finding support on VWAP. Not that it really matters. Daily looks okay. Yeah, guys. So things around the market are, so the setups that you would expect to be acting well are acting well. CELH, another one of those that just, if it can just tighten up. Give me a one tight day. Give me a nice tight red day. One. That's all I need. Yeah. Yep. Undercut and rally much easier if we leave a lot of wick. Yeah. Yeah. Like a strong doji. Yep. I agreed. But here's the thing: is it is if it undercut that wick of a Friday, and then essentially is bouncing right off the 100. Like it's done here in the past. It's clearly already shown you that it's support. If it starts to rally right back through Friday's low, that is a setup you can take. You could have been looking to buy very low 63s with your stop at 63.43. I mean, about a 50-cent risk on a $60 name. You really can't beat that. I could have put well over 10% of my account to work. I could have put 15% of my account to work, 20% of my account to work. And just been risking a very, very, very small amount, and that's what tight does for you. Tight allows you to take on, that kind of risk. I could have bought 4,000 shares and been risking $2,000. I mean, literally, less than half of 1% risk. Less than 1% risk. It's why I had it on watch this morning. It was something that I even talked about. I don't know if I had the video recording, but it'd be nice to go back and look at that if I said it out loud. I believe I did. I just didn't take it. And that's okay. I'm not mad about it. That's just life. But undercut rally is a setup that I like to trade, and of course finding support on the 100. I should have been better prepared, or just more willing to pull the trigger. But again, I've been hesitant in this market, and again, I'm also managing quite a few positions as is, and it's not like I've got some insane traction on any of them. They're green, but they're not super bright green, with the exception of EMPH. And I guess Stem's treating me pretty well too. Tan as well, but I've been in Tan for over a month now. So yeah, I'd like to get more traction in the positions that I own, so that I can get more comfortable opening up more, more exposure to the market. I don't just want to keep opening up exposure as shit's not working. Like if I'm just getting it stopped out every single time I touch something, I'm not. I don't want to open up, 5 6 names in a day. And if I do open up, 2 3 names in a day, you better believe it's going to be on absolutely perfect size, like even smaller than normal. But again, like something so tight on Oxy, if I stick to my rules, about sizing, again, I'm not even if I took 10% portfolio position here, I'd be losing like point one or point two if I was wrong. And I could have taken a 10 15% portfolio position and literally had 0.2% of my portfolio at risk. I mean, those are risk rewards that I like. Not to mention you'd be up almost 4 to 1 right now. Risking 50 cents and you'd be up almost $2. I mean, that's something I can live with every single time. You know, and at this point, your stop wouldn't have to be low of day anymore. I mean, if you really wanted to, you could bring your stop up to even at this point. Once you get that 2R, 3R, 4R kind of a situation on your trade, you'd already be up 3% ish. Yeah, I wouldn't even be taking a red trade on this thing anymore. So definitely something to recognize, and I'll be better at executing setups like that in the future. I mean, I'm able to find them and recognize them. I just don't always pull the trigger. Guys, just like you, I'm human and I hesitate. And if you hesitate, the trade kind of gets away from you. And now it's up almost 4% today when its average daily range is 3.5. So it's already out. It's already gone. Something that I just can't touch. Yeah, I use EMAs only. I know some guys use SMAs and whatever else, but just EMAs for me. It's the concepts that are more important. Do you have a tight entry? Is it in the right sector? Are you waiting for the healthy market? Are you sizing in properly? Are you recognizing leaders and a good setup? But yeah, EMAs for me. They're just easier on the eyes, I guess. Would be so nice if EMPH closed like this and then broke over these tops tomorrow. Hopefully she doesn't close too much weaker.
COCP.
Yeah, I mean, again, SMAs, EMAs. I use EMAs, and I just so happen to recognize it being bought off of the 100 every time. I don't really know how that relates to the SMAs. I mean, I can find out right now. Let's see. Here's my SMAs right here. But yeah, I mean, not quite as perfect, but doesn't even matter. Doesn't even matter. Still an undercut rally setup today if you were ready for it. But yeah, I just use EMAs. They're just cleaner for me. Just to my eye. I don't know whether or not they actually work better or not. Or again, it's the concepts that matter. Um, I use Windows 11. Do I like it? I have no idea if what I'm using is Windows 11, man. I just let my computer install the updates on its own. I have no idea. I'm far from a tech guy. Honestly, the only tech I do is technical analysis on charts. That's about the only tech I do. But I have no fucking clue. Like, my computer's like single purpose, man. I leave my screens and my trading platform and all that shit up like 24/7. So I don't really use my computer for anything more than exactly what you guys see me doing. Do do do. Well, yep, things just would need more time. There'd be no more buys today, honestly, on anything. So, unless some of you guys have some questions that you'd like answered, honestly, I'm just going to go ahead and probably call it a day here. Be back tomorrow. Scan tonight and see how things are holding up. But something like CSIQ, this could be a nice little dip buy setup. You know, if it's breaking out over these little two tops at 41.50 tomorrow, you know, and the market's healthy and solar's going higher, you know, I'd have to see EMPH and FSL are holding up fairly well, and then, you know, this could be considered a dip buy. So breakouts, dip buys, undercut rallies, about the only three ways I'd like to get into charts, honestly. The only three kind of entries I like to take. And traditional breakouts, you know, they're not really working too well in this market. They're not really working too well. So we'll see. Breakouts are going to work really well in bull markets, not in this bullshit. But yeah, I'm still seeing a lot of solar on my scan. SPWR, Nova, CSIQ, and DQ. So 4 out of like the 10 names on this little scan that I have are solar. This is far from perfect though, but you know, scans don't lie. Money's going there. I would avoid DQ though. It's a China solar name, and China's have been acting like shit. LNG, huh? Yeah, Wolf wasn't perfect today, and that's why it was a clear pass. Plus the market sucked. You know, people get anxious to get in these, you know, and you end up red. You know, you only need 4. I don't, like I said before, and this is a great metaphor. You know, you guys shouldn't be walking into the grocery store just because it's open and you've been dying for some bananas, and the only bananas you see are bruised. You know, they're bruised with big brown and black spots on them. Like, are you still interested in buying bananas? You know, these are just bruised up bananas right now. You know, nothing is perfectly ripe and cut off the tree. That's how I like my bananas. I like my merchandise to be absolutely perfect. You know, I don't go into the Rolex store and then just accept any old Rolex they're gonna give me. No glass, no scratched up glass. You know, no scratched up bracelet. Nope. If I'm spending my money on a Rolex, I expect my merchandise to be absolutely perfect. You know, or if I walk into the casino, I like to know that I'm staring at aces before I place my money down. you know, because you're allowed to do that in the stock market. You're allowed to make sure you've got aces before you put your money down. That's the beauty of the stock market versus, you know, I get asked all the time when people are like, what do you do for a living? I'm like, oh, you know, I trade equities. And people are like, oh, isn't that gambling? Yeah, for you, maybe. Not for me. My money doesn't go down unless I'm staring at aces first. You know, my money doesn't go down unless I'm staring at aces. And if it does go down, you better believe it goes down much smaller. Way smaller amount of money. And then I'm happy to add more money to the pot when something's working for me. You know, I'm happy to add money to the pot when something's working for me. And then that way I won't even be red. So even when I do add money to the pot, it's not like I'm increasing my risk. You know, I'm increasing my risk in something that's working. So, you know, you're not going to see red anymore. You're already seeing green. Oh, I don't know, man. I don't know. How large of drawdowns do you usually have every year? I don't know. My biggest loss of my career was when I was day trading. So I lost like 210K in a day. And I've never even had a, you know, a 50K red day swing trading. So yeah, I've had really ugly day trading days, and that's just what happens. That's the nature of the beast when you take too much size in a, you know, in random ass shit tickers that pop up, you know, day one, and you don't stock them, and you don't have your entry, and you don't know what you'll lose before you get in, and you know, you buy the dip, and then you buy some more in the dip, and then you buy some more in the dip, and then the volume dries up, and then you're fucking stuck, and you can't get out, and when you do want to get out, you crush the stock, and that's what happened to me. You know, just did all everything you're not supposed to do in the market. So, but you know, it was a learning experience, and I don't give a shit. You know, it's part of our education, and it's never happened to me since. And I've also, you know, I've had, you know, some of my biggest days day trading. You know, but my biggest individual trades have come from swings. Yep, that's exactly what I said last week. That's what makes day trading so difficult. To compensate for the lack of range or percent move, yeah, I use big size and then get smoked. And here's the thing, it's like, you know, some things aren't incredibly liquid during the day, and then again, to make up for that percent move, you oversize, you know, you and everybody else, and that's normal. You know, you oversize, and that oversizing. And here's the thing: when you want to put on really big size, you're like trying to buy that dip, right? So you're not seeing red. And then you know, yeah, you say no stop loss, but here's the thing: when you're day trading, you know, things are so fluid, and you haven't like really vetted the charts that you're trying to get into before you get in, because they're just hitting your scanner, right? So it's like everything's by the, you know, fly by your pants, and you know you're trying to make money. And once you get committed to a chart when you're day trading, you oversize. And yeah, I mean, you know, day trading, it tends to lead people down a scary road. And it's not that, it's not if you don't have rules, it's just, you know, how it goes sometimes. You're making up for the lack of percent gain in the day with taking too much size. And you know, things coming out of things in a day trading setup, they're usually, you know, like if you want to day trade a breakout setup, okay, well, you know, that's not a bad idea. But you know, 2020 had plenty of those. Early 2021 had plenty of those. But then again, if you day trade a breakout setup, you're gonna feel like a total clown when you know, the chart, you end up looking back on something that you day traded, and 4 days later it's up another 30%, and you're just like, holy crap, I own this thing at 13, now it's at, you know, it's at whatever. You know, you're just like, wow, now it's at 19, or now it's at whatever the hell it's at, 16, 15. You know, but you caught it for a 40-cent move, and you thought you felt cool on day one because you took extra size on it, instead of just taking proper size and letting time be the thing that pays you. You know, like I would much rather catch a move like, you know, AMR for months. You know, I'd have much rather bought it here at 65. on that day after it got super tight. Okay, I'd much rather own AMR with proper size and watch it go to you know, whatever, 140 or 150 before you ever get stopped out or higher. So yeah, that's my attitude. I'd rather let time pay me. And then that way, once you learn how to buy and hold a breakout setup or a chart that's in an uptrend, that way you can get all your money to work. Because even when you day trade too, it's like you could be staring at 5-6 million in equity in your account, but you're not going to put that all to work in one name. So it's like, okay, you got $5 million plus leverage that you can use. You got 10 million, but yet you're still buying 40,000 shares of this $3 name. And looking for these like $8,000 and $10,000 scalps when you've got 10 million to play with. Yeah, fuck that. I'd rather figure out a way to get all 5 million of my money at work safely and the other 5 million of leverage that I can use safely, and then see what happens when you put yourself in the right sector in 4, 5, 6 names and you got 10 million working. Yeah, you're not going to miss those 10K day trading days. Those are going to seem like absolute peanuts. You catch yourself a nice 3 or 4 day period where all your positions are working and you've got 10 million at work. Yeah, all of a sudden now you're up 800,000 on your money. Way better than the 10 grand little scalp you just had. And that's my attitude. That's how I look at trading. I want to get all my money to use or at work and then some. I want my money working and I want their money working for me. But how do you do it properly? How do you do it safely? I'm not being a dick and buying massive, stupid size positions. I'm adding multiple positions that are coming out of tight entries and leading groups. Yes, I did. I took some other trades besides Tesla. I took on at 69.50. But I sized it super small. And I got about $3 worth of risk. But my size is incredibly small. It's half of a normal size position. Yeah, I liked on as well. I liked how it found support on the rising 50. I like that this thing's been in an uptrend. It's been one of the leading semiconductor names. I don't. Yeah, it's a bit loose. On is a bit loose. It's not ideal. It's not perfect. What I did like about it though was this supply area here for the last couple days. Right, this is what I liked. There's clean supply on the daily, and then it started to break up over that. And again, I've got my stop. My stop is, you can see how well this thing has surfed the 50. Held the 50 here, and it's held the 50 here, down here. So I don't know. If we were in a better market, it'd be better. And again, I've got small size, so, slight of an anticipation, but I'm widening up my stop a little bit, And that's even more important. I'm widening up my stop a little bit, and I don't have major size. And I do not have major size. So I've got enough wiggle room to let it work, and I know what I can lose if I'm wrong, and I'm totally comfortable with that number. And not to mention some of my other positions are pushing back up like I had hoped. CCJ, EMPH is holding up well. I've had it for days now. LTHM's pushing back up. So, based on my current positions, STM's pushing back up. Like, based on my current positions, I'm okay taking on a little extra risk. What I have bought is working okay. But what I did buy today, Tesla and I've sized down on. I've sized down on them. And Tesla's simple. My stop's at today's low of day. Yeah, some of these lithium names look good, man. These solar names look good too. This one's a little choppy and random, but it trades pretty good volume. Nova. Nova's not too bad either. Nova's got a little bit of work to do. We'll see. Yep. Yep. PLL, if it puts in a tight day tomorrow, I agree. I'd like to see an inside bar day. I'd like to see a red candle print inside this green candle. Like gap down just a little bit overnight, pull back, maybe hold the 20, and then and then wick up off of it. God, that would be so perfect. A little inside day. And then on Wednesday, you're buying it as it's breaking out over Tuesday's high. That would be a textbook inside bar. The last absolutely perfect one that I remember was RYTM. Like right there. Oh, I mean, oh my goodness. Yep. That would be just absolutely fuego. If you can get something that, resembles that, I guess. That's an inside bar. Yeah, I speak Spanish. Yeah. Nova ir. Yeah, I can agree. Maybe. These, but again, it really depends on the rest of the sector, and it depends on the stock market. How's the rest of the market going to look? Is it going to look like shit? Maybe. But if SPWR decides to go too, and Nova and CSIQ and EMPH and FSLR, if those are going to go, you better believe so will the rest. And we'll see. The big determining factor is going to be this SPY pretty much for the market. Like Apple and Microsoft have to find their footing. As dumb as that might sound for some people, they're unrelated, but these names, Apple and Microsoft, carry so much weight. They carry so much weight towards the overall market. Tesla could give us a boost, and healthcare names and financial names can help give us a boost as well. But a name like Apple's gonna have to find its footing. Fubo. Turd. Come on, CCJ, do your thing, buddy. Yeah, we'll see, guys. Honestly, what I own is acting well, so I can't be too disappointed with that. Despite the market, at least I feel like our eyes are in the right place. That's always, our timing might just be off, but our eyes are in the right place. At least I believe. So it's really good to identify, what names you'd like to own. What names you think are best. Tesla's, EMPH, FSLR, CELH, ON, LTHM. I mean, STEM. Like, I can go down the list, There's really nice setups. Like, I don't own TH. I might like to. I mean, this is, it's not super liquid, but I might actually have to pass on something like this, unfortunately. It's going to have to get pretty big volume on breakout day for me to want to participate. But, again, there are setups out there. There are setups out there, guys. ANLY, Suave. I'd rather own, like, Suave. More expensive. Doesn't have to be incredibly liquid. It just trades a higher dollar volume. Trades almost as many shares a day as TH, except it's, over 10 times the price. So the money that goes into this thing is way greater. XME's the best sector today. Metal mining. Yeah, but XME looks like crap still compared to, TAN. So XME's the best sector, metal mining. So what does that mean? Like X looks good, new looks good. Nope. Yeah, none of these look really good. None, as a matter of fact, they look like shit. So, this could just be an oversold bounce for most of these, and that's why XME's outperforming today. But until XME really gets its shit together, until I see a couple other things in that sector look better, you know. But yeah, guys, I'm about to call it a day here. I think we had a pretty long stream. I don't really see a whole lot to do. Just manage what you have. Manage your open positions. Keep your stops. Respect your stops, should I say? Don't keep them tight. Just respect them. And don't look to get aggressive in this market, guys. There's going to be a day and there's going to be a time when we can get fully leveraged very quickly. In a day or two. There's going to be a day when 10, 12, 15 alerts are going off at the same time, and it's going to be hectic and chaotic, and that's the environment you want for breakouts. You want everything just flying higher and big institutional support everywhere. Right now we're not really getting that. It's very selective, and you guys should be too. So everyone, until tomorrow, it was a good day. Thanks for the questions, and we'll see you guys tomorrow.